Step into the metalverse, a vast, ever-evolving realm where industrial metals take shape amidst shifting prices, market trends, and supply chain forces. But what does it all mean for you? Welcome to Cup of Joe. Named in honor of our founder, Joseph T. Ryerson, we help you navigate the metalverse, one conversation at a time.
Welcome into Cup of Joe. We're so glad you're with us for this June episode, and we're going to be consistent, if not repetitive, here over the last few months. Tariff talk. I'm Mike Carrazzo. I'm the content manager here at Ryerson. Joined as always, Nick Webb, our director of risk management, commodities hedging. Nick, how's it going, man?
I'm doing very well. How you doing this fine June Thursday?
Doing well. And it's been a while since you and I have been live together. Last two episodes, one of us has taken off. So
that's right.
It's good to be back live with you.
It really is. It's very nice. Hopefully we can get a lot of Q&A going around the new tariff discussions that have come out in the last few days.
Right. Yeah. Tariffs. It's what we're going to be talking about. It's what we have been talking about, and little bit of nuance to the show today. So we're definitely going to dig into that. And then earlier this week, we had a chance to poll our LinkedIn audience. Nick, I asked them, what on earth do you want us to talk about besides tariffs? And they said, majority said end markets. What's going on with end market demand? So we got some commentary from some vertical market managers here at Ryerson. And then we said, you know what? Let's bring one of them on the show today. And later in the show, we're going to be joined by Russell Earls, who's our vertical market manager for aerospace, defense, and semiconductor. In fact, why don't we have Russell say hi to us right now? Russell, welcome to Cup of Joe.
Thank you. I'm glad to be here. Thank you for inviting me.
Yeah, it's going to be an exciting discussion on planes, defense, semiconductor, and all that good stuff. But we got to get the big news out of the way first, right? Right, Nick?
That's right. And hopefully this is the first of many for Russell with us.
Yes.
So, as we always have to do, we do need to cover the safe harbor provision. These are the opinions of Nick Webb, Mike Carrazzo, Russell Earls, not the opinions of Ryerson. Do your own research. But we've got a lot of great content covering the latest on the tariffs and what it means for metals markets. So let's go ahead and hop right into it. So first things first, about a month ago, we talked about this exact slide. And I think I'm probably paraphrasing, but the way in which I covered this slide was over on the left-hand side, you've got 17 or 18 nations, which are the biggest trading partners with the United States. And at the time, Scott Bessent, who is the U.S. Treasury Secretary, said basically, in so many words, take China, throw them to the side. We've got 17 other nations that we are very actively in discussions with on trade talks and expect trade deals here soon with those 17. What's interesting is we almost have to do the exact opposite because he said take China, put them to the side. China actually, if anything, is one of the few that's had any kind of reprieve in tariff discussions. We talked about that last month, but they're one of the few that's actually gotten a little bit of assistance from the Trump administration. The others on this list have not yet come to any sort of formal agreement or formal announcement just yet. I would have expected as of this time that we would have seen some of these. The only one that we've actually seen any real memorandums of understanding with is the United Kingdom, which, funny enough, they have a trade surplus with the United States. So I wouldn't say that was an overly large surprise or deal breaker, but it was that's really the only one that we've seen thus far. So, as we sit here right now, we are in a situation where we don't really have the tariff traction or the trade. I apologize, the trade discussion traction that I would have expected by this point in time. And perhaps not coincidentally, last Friday afternoon, so I don't know, that would have been I think it was the 30th of May, the last business day of May, Trump came out and said, basically, we're taking all tariffs on steel and aluminum under Section 232 to 50% from 25%. So this is just part of the proclamation, but in essence, that's what they were doing. So that's going to be carbon steel, aluminum, and stainless steel, all going from 25 to 50%. This does include Canada, Mexico. So this is essentially no exclusions with the exceptions of one. And I think it's worth noting that the one exception is the United Kingdom. And for those who were listening just a minute ago, the United Kingdom is the one country that's come to the table to negotiate. Even though it wasn't a big deal, they're the one that got 25% to stay in place rather than the 50. So I don't know if that's going to be an exact blueprint of what we may see in the weeks and months ahead. Those who are willing to come to the negotiating table, maybe they get a reprieve on these, but perhaps something to keep in mind as we talk through all of these elements.
So you're thinking it might be an element of, since they came to the table to negotiate, there was a reprieve there. But I'd have to think others have been in kind of active negotiations, and quite surprisingly, I'm actually surprised Mexico hasn't been one that we've made a deal with quite yet.
I am as well. And I agree with you that there are discussions that are proceeding. We just haven't gotten the official Truth Social post that said, look at what we succeeded in doing. So I still expect that to happen, that there will be announcements country by country, probably nations like Mexico, like Japan, hopefully Canada, South Korea, the normal names you would expect to be the closer allies. I would expect those discussions to be moving forward at a better clip. And only at that time would I expect any movement really in the tariff rate. That's at least my take. There are some others who believe that these 50% tariffs are firm and true, and they're going to stay in place for a long period of time. And maybe even, as it relates to Japan specifically, there's a chance that some of this was in sympathy or in collaboration with the idea that Nippon Steel is now going to be acquiring U.S. steel. That maybe this is a sign of good faith from the U.S. administration to say, hey, if you're going to make this $14 billion investment into modernizing U.S. steel facilities, you need to have some sort of protection, some sort of moat. This could be part of that as well.
And he dropped that news was actually dropped right at the press conference or the event for Nippon and U.S. Steel, right? That's when Trump said this. So yeah. And the discussion around that, I don't want to talk too much about it because we don't have all the details yet. But it was kind of interesting verbiage where he basically said they're going to be making an investment, and U.S. Steel and U.S. employers are going to continue to be in control. A little bit of confusing verbiage in how he described that, but it sounds like, for all intents and purposes, it's a Nippon Steel acquisition. They're going to maintain U.S. employees, and those U.S. employees are just going to be at the helm of some of the decision making. But there's no doubt about it. If they're investing $14 billion, Japan's certainly going to have some say in how things operate and how things modernize. If you don't mind, we got someone dropping a question here. I thought maybe it's the right time to ask it. Was the UK supposed to go back to implementing quota based on the announcement 3 weeks ago?
There is a chance that both the UK and Europe as well does move towards a quota system. I didn't mention this already, but it is worth noting that the EU did get a reprieve of tariffs out to July 9th. So the essence of that was really just to say, let's give it a little bit more time to further trade discussions and hopefully come to a more finite deal between now and basically a month from now. But within that, it does sound like there are rumors of potential tariff rate quota systems going into place for not just the United Kingdom, but potentially on all of the EU. That might be coming here in the coming weeks.
Makes sense. Okay.
Now let's talk about the market impact across really the four primary metals that we're watching, because they have been somewhat significant in certain spots. One place where it's not all that significant, LME aluminum. This is a 5-year chart of the LME aluminum ingot price. And you can see, if you look back over the last several months, we're really not in uncharted territory. We've been trading fairly range bound for really the better part of 2 years. We did get a fairly large sell-off around Liberation Day back in early April. We've since recovered a little bit. And I think last month I said that my expectation is LME aluminum is probably going to trade fairly range bound in the $1.10 to $1.15 range. I still think that's probably going to be the case. And tariffs don't really have an impact on the LME aluminum price because the London Metal Exchange is more of a global benchmark for prices. It's not going to be inclusive of any tariffs that the U.S. is going to place on things. But where we are going to see the tariff impact is going to be in Midwest premiums. And so that's what's being shown here within this image for those who have the visuals. The orange line is going to be Midwest premiums. And again, for those who don't know, Midwest premium is the premium to get aluminum ingot from from foreign sources or from the borders of the United States to the Midwest portion of the United States. So that's going to be inclusive of things like freight and certainly things like tariffs, because those would have to be paid as they arrive on the U.S. shores. The orange line is as of a week ago, and you can see that the futures market was hovering right around 38, 39 cents for the balance of 2025. As we go left to right, those are the futures months. Fast forward just to where we are yesterday, that's going to be represented by the blue line, and you can see a fairly massive jump by about 15, 16 cents in most of the futures contracts. So in percentage terms, you're talking about a 50% move or so just on the premium contracts. For dollars per pound as it relates to aluminum, 15 cents on Midwest premiums. We're also beginning to hear some rumors and discussions about conversions likely going up to the tune of somewhere around 10, 15 cents. And that's really on the back of the market is viewing things as getting pretty tight. Depot inventories are getting depleted. And so both between Midwest premiums, which we've noted have already gone up by 15 or so cents, and the conversion factor, we're looking at about a 25 to 30 cent move higher for the all-in cost of finished common alloy aluminum in fairly quick fashion. Now, where do we go from here? There are a lot of questions on the severity or lack of severity that we could potentially see from these tariff announcements. And there's a lot going on here on this page, and I apologize for the numbers. This is something that I created within a spreadsheet. But ultimately, a couple different scenarios, essentially. You've got the top scenario, which is all nations around the world, all exporting nations that export aluminum into the United States. The top assumption is that all of them get hit with a 50% tariff and that remains in place. And the other assumption is that we've got a $1.13 aluminum ingot price, which is roughly where we are right now. So if we take all of those things into consideration, and over here on the left-hand side, you can see how large of a market share each of the countries have or have had historically with exporting into the United States. But long story short, if we look at pre-tariff levels, which let's call it pre-Trump levels, so late 2024, we had Midwest premiums hovering around 20 cents per pound. If 50% tariffs stay into place, which they are officially in place as of yesterday, the market expectation is that we could see premiums jump by 53 cents on top of the 20 cents. So that would take premiums all the way up to 73 cents a pound per my rough math here in the spreadsheet. That's a pretty wild move. And that's as we referenced where the futures market is currently, we're not up to 73 cents. We're somewhere in the mid 50 cent range as it sits right now. So why is that? My expectations, I think the market is still viewing there to be a chance that certain nations come to the negotiating table and that some nations get exempted. For instance, down on the bottom scenario, this is just looking at Canada. So to the extent that Canada is able to leverage its proximity to the United States and the fact that we've got a USMCA agreement and hopefully they come to terms on some sort of trade agreement. If in the event just Canadian aluminum tariffs drop from 50% down to 10%, which they could even get eliminated. But if they just go from 50% to 10%, that weighted average impact to Midwest premiums drops it from 53 cent impact all the way down to 20 cent impact. So not only would we not be at 55 cents, which is where futures currently are, we could potentially see things quickly ratchet back down to somewhere around 40 cents on Midwest premiums. The unfortunate thing in this market is it's a very binary thing. We can't really predict the stroke of the pen from Donald Trump and say what's going to come. But this gives you an idea of the sensitivity within this market of, if these tariffs stay in place, we could see a 7 handle on Midwest premiums, which is 50 some cents higher than where we were just 1 week ago. We could also see these things unwind in fairly quick fashion. My analyst sent me over something just about an hour or two ago that said that the U.S. is in discussions with the Middle East. And as you can see, we've got a couple of Middle Eastern nations over here on the left-hand side, that those discussions may be nearing some sort of trade deal. And as part of that trade deal, it's been rumored that steel and aluminum tariffs may be included in that. So again, one more potential thing that could knock these premium levels back down. But we just don't know that level of detail without having somebody boots on the ground in DC, having essentially the ear of Donald Trump.
And Nick, someone's asking, and I think it's a good just kind of level set too, about who sets the Midwest premium. And if I've been listening to you for the past few years, correct me if I'm wrong. Is it Platts from S&P Global?
Yeah,
So
that's right. So Platts is going to set the spot market in a similar way in which, the London Metal Exchange might set the base metals markets, or the CRU sets the steel price. It's probably more accurate to say that it's more like the CRU. And the reason why I say that is because Platts, much like CRU, is actually going to take an amalgamation of
might have had Nick freeze on us here. I think we lost some audio on Nick. Hopefully,
and then they're going to use that to compile to the CRU. Now the spot. Oh, my.
Give us 1 second here.
Mike, you able to hear me?
The technical difficulties. Nick, are you back with us?
Okay.
Nick may need to jump out here for a moment and jump back in.
Okay.
Wait,
Yeah.
wait.
1 sec.
You're coming back. Okay. So while there you go. Maybe he's connecting again here.
You hear me?
Wait,
You got me?
I got you.
All right.
All right, I had to tap. I was going to tap dance there for a minute or two.
The joys of live presenting, huh?
Yeah. So I think we lost you on the effects. Who sets the Midwest premium?
Yep.
And then you started going into the CRU, the effects.
Yeah. So just want to make sure you can see my screen, correct?
Correct. Yep.
All right. So yeah, I was probably blabbering on too long, and the internet caught that sign and just cut things off. But yeah, so the Platts sets the Midwest premium much in the way that CRU sets the Midwest premium, in that they take submissions of actual trade data and use that to compile their index. So hopefully I didn't miss too much ground there in the middle. But what's interesting is as that's being, as we talk about Platts setting the spot index, we are finding some deviations between where the spot market transactions are getting submitted versus where futures prices are being submitted, because the difference between the futures market and, say, the Platts market is the futures market is essentially, I don't want to call it a betting market, but it is a place where people can say, I think this is going to happen, or I don't think this is going to happen. And so the futures market is kind of trying to predict, what type of exemptions or exclusions may occur at some point in the future. So, even though just simple math would say that if 50% tariffs are in place, we should see 73 to 75 cent Midwest premiums. The futures market isn't moving there. And that's because the futures market is just a free market where people can buy and sell contracts. And they believe that this is going to be something that we see some exclusions, at least for now.
And just to confirm, the 53 cents or 20%, 20 cents, that's on top of the base, which is already now. So then the premium, like you said, would be close to 80, 85 cents, something like that.
So what I'm calling the pre-Trump tariff levels or Midwest premium levels would have been around 20 cents prior to Trump coming into office. So yeah, these would be on top of,
Yep.
So yeah, 73 cents and 40 cents in each scenario.
My math is terrible. Sorry.
You're good. And yeah, sincerely apologize for freezing up on everybody. So moving over to the carbon side of things, again, slight less moves when we look at just the spot indices. We were actually seeing U.S. steel prices per the CRU on a bit of a decline in the last several weeks. And we most recently, a couple of days, just yesterday, got the CRU print all the way down at 865. Well, with this announcement, so a couple of things to note. One is that CRU print is going to be lagging data. So they're taking the prior week's compilation of physical transactions to create their index. So that, for the most part, doesn't really include a lot of this post-tariff narrative. So we would expect there to be a little bit of a lag in what's happened with the CRU to what has been announced with regards to tariffs. But a couple of things to point out as we look at this slide. When we look at Northern European prices, which are shown in the blue line, 664, that is an ex works number, meaning that is the price that, coming out of the steel mill. So $664. If we assume that Northern Europe continues to get hit with a 50% tariff, take your 664, slap on 50%. That gives you, let's call it $330. That gets you up to about $1,000 before you even toss it on a boat, put insurance contracts on it, and ship it over to the United States. So all of a sudden, you've just lifted the floor of pretty much every export market into the United States, just because we are still net importers of steel here in the U.S. So all that we've done is, in the very short term, we've increased that marginal ton of supply coming into the States. Now that's just Northern Europe. Every other nation is going to have a different cost structure. But just using Europe as a proxy, that gives you an idea of how quickly these things kind of have to get re-ratcheted. So at the very least, I would say we've lifted the floor. How far have we lifted the floor? Well, if we use futures markets as a proxy, the July, August to September contract have moved higher in the last week by about $100 per ton. It's different depending on how far out into the future you go. There are a couple of reasons for that. In my opinion, I think, again, the fact that you see Q4 having smaller moves than, say, the summer months, I think a little bit of that is backed or predicated on the fact that the market believes there will be some sort of dilution, some sort of watering down of this tariff impact. That may be right. That may be wrong. We don't know. But I think part of that is what's happening there. I think the other fact that's happening there is the Q4 tends to be a seasonally weaker time than other parts of the year. So I think the market moves just are a little less dramatic on those months. But certainly it feels as though the floor has been lifted under where prices can ultimately bottom out, as long as we have 50% tariffs on all these regions.
Yeah, I was going to ask you, I saw a note from our buddy Josh Spore's CRU, right?
Yeah.
Yes, on our show, probably last year at some point.
Yeah.
And they've been talking obviously a lot about this, and he put a point on LinkedIn which I didn't know, and it said something to the degree of like prices for products like sheet and coil are generally set by imports, so any increase in tariffs quickly raise domestic prices. How does that
Yeah.
work?
Yeah, and the idea there is essentially there's no real point for the United States steel producers to cut their prices so far that they undercut any type of foreign supplier. In essence, the lowest price that a U.S. mill should ever sell is effectively wherever the best foreign price is, plus logistics to get it here, which is going to include freight, insurance contracts, whatever else. So if their best competition right now, and Josh also, he did a presentation earlier this morning, which was very solid with the CRU. His estimation is that the new floor on the global market coming into the U.S. under 50% tariffs is somewhere around $930, which, as you can see, based on the futures market, we're still not up to that $930 mark. So, should these 50% tariffs remain in place, I would expect a little further upside in futures and in the CRU to account for that factor.
Okay, very interesting. Yeah, that really stuck out. So now it makes sense. Yeah.
Yeah. It's effectively just there's no other competition aside from your foreign importers. So don't ever take your prices lower than them. But now that you've got a 50% tariff on them, that competition is at a much higher rate than where they were prior.
Makes sense.
Now, what's interesting is, as I talk to some of my colleagues who are on the purchasing side of physical metal, they still tell me that there's not a massive panic at the moment for sheet product. So the times of 2021, 2022, when we saw just massive forward buying and prices going absolutely crazy, it doesn't feel like we're yet in that stage, or maybe we're not going into that stage. One of the things that I think is helping that is the fact that we have seen U.S. production utilization from domestic mills ramp up a bit. We've gone from about 74% back when Trump started his presidential campaign to where we are now, which is 78%. That 4% represents about 5 million tons of annualized production. So there is more metal out in the United States. I think that's helping to keep a little bit of a lid on prices and how they react to this tariff news. But it's still not going to be enough fully if we are still a net importer of foreign steel. So I think this is helping to aid things, and I think it's helping to keep a little bit of a lid on prices, but it still feels as though we're going to head certainly into the mid-9s, maybe even slightly higher than that on hot roll coil in the short term.
A little foreshadowing into our conversation with Russell, how demand from other markets may impact everybody else going forward. Keep
For
that
sure.
in mind.
For sure. So where we're probably seeing the most calmness is going to be on the stainless side of things, where nickel markets continue to be somewhat under pressure. Seems like the $7 per pound range is really kind of a comfort zone for the price of nickel. As you can see, I drew in the moving average lines, and currently we're still below all three of those. I think they're going to continue to act as resistance, to any big price moves higher. It's also a situation where Indonesia still very much wants to increase market share if they ever do see higher prices. But I think $7 to $7.50 seems like a happy place for nickel for the time being. And the good news for consumers of stainless is this is going to mean more stable stainless steel surcharges. We've seen some very small surcharge increases from the domestic mills trying to account for the tariffs, but they're a penny or two. They're not anything too massive. So stainless steel is one that we are still seeing quite a bit of calmness within pricing. That should be welcome calmness to many of our customers who are buying stainless steel from us.
Yeah, stainless has been quiet throughout this all, kind of
It
slip
has.
under the radar there for.
It has.
Yeah.
Yeah, there was a little bit of news in the last couple of days that said Indonesia had to take one of their mines down because of tourism. It actually looked like a beautiful location, and it was impacting some of their, I guess, the water quality. So they took a little bit of production down, but we haven't heard anything too major at this point. So it's been kind of a sleepy market.
What do you know about vanadium?
Honestly, very little.
Okay.
I would say that pseudo falls in the realm of rare earth metals, which is
Gotcha.
certainly under the limelight with regards to China and China cutting off exports of rare earth metals. But why do you ask? Why do you ask about vanadium?
I just want to randomly know if you know about vanadium.
just something that keeps you up at night.
Yes, exactly. No, there's a question from the audience about what appears to be a 20% increase in vanadium surcharges. I assume that has to do with stainless.
I would say more so. It probably has to do with the export controls coming out of China,
Controls. Okay. Gotcha.
Yeah, which that is certainly something that's on the front of mind of the Trump administration. They're trying to have talks with Ukraine. They're trying to have talks with Greenland and most likely Canada as well. So those could be things that's a moving target as talks progress with those nations. But yeah, the Chinese news around rare earth metals is most likely having an impact on the vanadium markets.
And to clarify, that question was related to SBQ.
Okay.
Okay.
Yeah. I know that there's vanadium, there's rhodium, there's some other rare earth metals that go into like tool steels and things like that as well. But I'm not a place where I'm an expert, but I would certainly direct them towards our tool steel team if they wanted to learn more.
Makes sense. And before, I don't know if you're going to move off, but we got a few more tariff questions, but let's wrap up your
Yeah. So. Yeah. No, still talking tariffs and their impact on metals, and perhaps no more so than within the copper market. And even though we have not gotten any official announcements of tariffs being enacted on copper, I think just the anecdote or the news coming out last Friday of Trump being more bold on tariffs again, it's feeding through to an assumption that the U.S. is probably going to do something on putting tariffs on copper. And you can see that pretty evidently when we look at the price of COMEX copper, which is going to be the U.S. exchange where copper is traded. So that's going to be your white line. And then the blue line is the London Metal Exchange price. And you can see that about a year ago, those two markets were pretty much in lockstep with one another. They may have deviated a couple cents here and there. But once we got into January, what happened in January? Trump came into office. We started to see this spread develop. And that spread back in March, early April, got all the way out to like 70 cents a pound. And that was really just how the market was pricing in the tariff effect of, if something does go into effect on copper globally, it's going to cause the domestic price to go up. And so there should be some sort of premium. Liberation Day caused a little bit of turbulence within that, but we're back to a scenario where there's about a 10% premium between the COMEX price and the global price of copper. And I would say that is the market basically trying to really just trying to peg some sort of probability on what that tariff may look like. And right now it's sitting somewhere around 10% is the expectation for copper markets. But I thought this was an interesting way to show that, just because you can see it day by day, how it moves around based on, verbiage coming from the administration.
Yeah, with copper moving or being kind of an indicator of industrial metals, right? All the time.
Yeah, for sure.
Talking about, they've been kind of absent from this discussion, but it's interesting to see, if I can talk right today. Interesting to see the direction it's going.
Yeah, and worth noting, I mean, being back at $5 a pound right now, we're within spitting distance of record highs, which happened back in March. So interesting times within the copper market. Things are actually pretty tight, and I would say getting tighter just with the development of things like AI, EVs, all those technologies.
Yeah.
Interestingly, I thought this was an interesting chart, although it doesn't really contemplate tariffs all that much. So on the left-hand side, you can see that is a year-over-year percentage move for copper, just based on historical analysis. On the bottom x-axis, you've got the global PMI. So as we discussed in the past, if you have a PMI of 50, that's basically year-over-year flat manufacturing activity. Something above 50 is year-over-year growth, below 50, year-over-year weakness. One of the banks, Bank of America, they actually put together this linear regression analysis to say there is some sort of relationship between manufacturing activity and where the price of copper ultimately goes. And as we sit here right now, global PMIs are basically hovering right around 50. And per their linear regression, that kind of suggests we should see, or in historical times, we would normally see some stability within copper markets. I think the one big caveat to that is this tariff discussion. It's hard to really tease out the fact that if there is in fact a 10 or 25% tariff on copper, prices are going to go up here in the United States, regardless of what PMIs do. But I thought this was an interesting analysis nonetheless, the relationship between PMIs and how they impact metals prices. And last but not least, before I kick it over to Russell, I thought this was a pretty solid segue because there is certainly a story of the haves and the have-nots, and I think there really has been for the better part of the last year, where certain industries, things like farm machinery, mining and energy capex quite weak right now with crude oil prices down around $60 a barrel. Not doing all that hot, some of these industries over on the right-hand side, but on the left-hand side, you've got things like industrial machinery shipments, HVAC shipments, which is going to be pretty heavily tied into the data center build-outs. And then last but not least, screaming higher, and has been for the last several months, is non-defense aircraft shipments, growing at over 50% year over year. And I don't have all the numbers in front of me handy, but we've really been seeing aircraft shipments from a demand perspective really going gangbusters over the last several months. And so with that, I guess I'd like to kick it over to Russell and see if he can shed some light on what in the world's going on within the aircraft market that's keeping things so crazy, along with the other spaces.
Yeah. Real quick. So as we said in the beginning of the show, we had asked our LinkedIn audience, what do you want to hear more about? And a good majority said they want to hear more from end market demand of metal. And as you may or may not know, we have vertical market managers here within Ryerson across various industries, from medical to semiconductor. Medical to HVAC, data centers, trailer, and we got some commentary which I'll share a little later in the show. But we thought would be great for Russell to bring us up to speed on aerospace, defense, and semiconductor. Russell, why don't you tell us a little bit about who you are and your role here in Ryerson?
Okay. Hello, everybody. I'm Russell Earls. I'm the vertical market manager for aerospace, defense, and semiconductor markets. I've been in the industry for well over 3 decades, and either in aerospace or defense or industrial markets, or all of it simultaneously, working for defense companies like Northrop and Hughes Aircraft Company, and major mills like Kaiser Aluminum, Alcoa, Arconic, and Carpenter Technology Corporation, and various distributors in the West Coast and the East Coast, with Sunshine Metals, New Source Corporation, Primrose, Production Metals, and now Ryerson. So I've been things and done places, right?
Quite the resume.
But I can tell the team in my 30 plus years, I've never seen things that are happening now. And I just wanted to share with everyone what demand looks like right now. And I'll start with aerospace. So COVID hit, and first Boeing had their issues that we're all aware of, and then COVID hit, and it suppressed the demand for aerospace. And then coming out of COVID, you had 2 big developments. Number one, the emergence of of the flying demand in India and China and around the world as people were more influenced. And that, and then the age of the existing fleets, because of the curtailment in production, both in Boeing and Airbus with the geared turbofan, it suppressed deliveries. So now, as we sit, the demand for aerospace commercial airplanes is over 17,000 backlog and growing. That's the largest in history. Wow. It's a 14-year backlog, and if you read the paper today, China says that they're going to buy 500 a new contract, and they're saying they want to give it to Airbus and not Boeing. But that's the kind of demand that we're seeing. So 14-year backlog, 17,000. Both Airbus and Boeing want to increase the line rate to satisfy this demand. So they both want to go to 50 planes a month right now. Boeing is in the upper 20s and Airbus is in the mid 30 to upper 30s. So you're going to see production demand increase dramatically. And it's a global business. And you're talking about aluminum, stainless, nickel alloys, all across the board. And one of the things that when you look at, not only are we talking about airplane structure itself, the inside, the outside, but you're talking about the things that hang off the wings called the engines. And the engines on an airplane are like Ferraris. So there's a lot of maintenance, repair, and overhaul, but the planes are too valuable to let it sit while you're overhauling the engine. So they just swap them out. So if you think of 17,000 airplanes, think of 68,000 engines for airplanes that will be built in the same amount of time, right? Amazing. And then you go over to Defense Department. So the U.S. Defense by itself is $921 billion for the 2025 budget, and they're predicting that it'll go to $1 trillion by 2030. Wow. Okay. And then, so not only that, but globally, the world, unfortunately, is arming themselves, right? So you have, the EU and other countries going from, 2 or 3% to 5% of their GDP to arm themselves. And then you go over to the semiconductor industry. And because of right now, as we sit, 85% of the global semiconductor being fabricated are done in Taiwan or South Korea. 85% of global semiconductor production is in South Korea or Taiwan. And China has said that it wants Taiwan back. So if something were to happen in that region to force that, then that would shut down the global world's ability to receive and, Taiwan and South Korea's ability to ship semiconductors. So the world is on this binge, if you will, to build their own semiconductor capacity. Fabrication is what is known in the industry, or fab. So over 30 plus fabs are being built simultaneously as we sit right now. Over 11 plants are being built in the U.S. alone. That was the Semiconductor Act that came out. Each one of these plants have to be built from the ground up because it's a class 10,000 clean room. Mm-hmm. So you can't take an existing building. You have to build it from the ground. Those plants are over $1 billion each. So think about the global binge that the world is going. And now that the world has to rebuild for the new generation of chips for AI and for defense and everything else. So I said over 40 plants being built, over 17,000 planes being on order, with 68 engines on order as we sit today and growing, and defense budget all across the world. And what they all use in common is the same metal coming from the same plants. So
as we think about what kinds of, I apologize to interrupt. As we think about what kinds of metals are going into these things, what types of grades should we be aware of? Do we expect capacity issues?
Yes.
Because I think some of our more industrial consumers may want to know, are there certain areas where they could potentially get stocked out because of these growth rates?
Right. Mm-hmm.
So for the airlines, you're talking about hard alloy aluminum. So 2024, 7075, 2 and 7 series will be the high users for these and derivatives of those alloys, right? So you're talking about cold finish rod and bar. So again, 2 and 7, but not only are they extruded, but then you have to take after extrusion, draw them through a die to give it more cold working, higher properties, and and there's just a handful of plants in the world that do this. And then for the semiconductor market, you're talking about the 316 ultra high purity and high purity alloys. So 316 stainless, 2024 7075 aluminum. For engines, you're talking about Inconels and titanium and nickel. If you think about an airplane, it's really what we would consider, we used to joke around and say it's a flying fastener because of all the fasteners that bolt the plane together. And most of the planes transition from aluminum to composite, but you can't fasten them with traditional steel or aluminum. You have to use titanium because of the galvanic corrosion, mating that with composites. So really, you're talking about titanium, Inconels, nickel grades, stainless steel, and aluminum. Now, think about one thing, pH grades, 15.5, 17.4, 13.8 are used in high volume in aerospace builds. But that 15.5 pH grade is produced on exactly the same equipment as a high purity 316 stainless steels. There's only a handful of mills in the world that make these grades. So you have the competing aerospace builds and the semiconductor builds, along with the defense requirements, right? And
sounds like there could be some bottlenecks developing here in the coming years.
And think about in the world of during COVID, a lot of the plants reduced their staffs that make these metals. And typically when you go to a mill, if you walk around, you notice the strange thing about it, everybody there is over 35. Not a lot of young people in these mills. And so this tsunami of demand, I'm calling it, that's coming about, that's going to be here, that's upon our doorstep here. The mills are having challenges hiring crews to expand into third shifts and beyond. So there is going to be a bottleneck that's going to happen. And I'm not building and construction, but close your eyes and say, in addition to that, all the hurricane damage in the Southeast and over 10 to 15,000 structures that were destroyed in the fires in California, the most expensive real estate, across the board, right? That will be rebuilt. So how many doorknobs, how much copper pipe for how much stainless steel and appliances will be rebuilt in the next 3 years, along with the airplanes, the defense rebuild, and everything else. So what I'm saying is that there's not enough metal to go around, not enough mills to produce it.
In general, will consume a lot of the stainless steel from all the appliances he puts in his house. But
Yeah.
do you have a time frame for when this might all come live? 17,000 backlog in the plane and the semiconductor. Like, are we talking within few years, half a year? What are we talking about?
The semiconductor builds have started now. Arizona and Texas and Ohio already have shovels. Arizona completed one fabrication. They are starting a second. So these are starting now. These are orders on the books for the airplane builds. This is not forecast. These are orders that are on the books. And typically airplane manufacturers and the buyers of airplanes contract separately for the engines than the airplanes themselves.
Okay.
So this is demand that exists, that is ongoing and searching for ways to expand at this very moment.
So
Well, as we
for
come back,
those who those sorry Nick, so those who might
oh, you
not
can.
be in these verticals, right, or in in another industrial that might be also consuming these metals, it's about, I guess, timing your buys for these because the capacity might not be there at a certain point in time.
Yes. Before COVID, semiconductor metal lead time was 84 weeks.
Ooh, wow.
Right now, 3 months ago, the best that we could get was 6 months. And now it's 3 months later, it's 11 months and growing. So the switch is on.
So those trends that we were seeing in the growth rates for non-defense aircraft, you're expecting those to continue years and years into the future, it sounds like.
Yes. And on top of that, audience and ladies and gentlemen, like I said, the airplanes are like Ferraris. So there is a higher, because the airplanes in existence currently are older, they are requiring more maintenance. The same metals you use to build the planes is the same metals you use to rebuild the planes. And so you think of that, it's called in the industry MRO, maintenance, repair, and overhaul. So maintenance, repair, and overhaul, the tempo of it is, and the demand for metals to that industry is also increasing. So I'm saying that there is there's a lot of demand out there that's real, that's going
This
to
is
hit us.
this is 17,000 commercial airlines, correct?
Yes, sir.
Airliners, gotcha.
Yeah, that's not counting Gulfstream
Mhm.
or everybody else.
And you had indicated, there's a question from the audience, capacity constraints for cold drawn products. Were you talking about cold heading quality wire or larger cold drawn products?
No, I'm talking about aluminum cold finish rod and bar.
Okay.
So we're talking, T651, which is cold finish is the designation for it. So those are the plants. There's only a few plants in the U.S. There's only a few plants globally that make this. And as far as I know, there's no plans globally to open a new plant.
Gotcha. Okay.
So,
Go ahead.
see, I don't know if we want to continue on this path, but I think it's probably worth noting. I mean, we've gotten fairly technical in some of the discussions, and
Yeah.
and this is certainly expertise that Russell has that Mike, you and I don't have. So, Russell, okay with customers, colleagues reaching out to you on any technical questions they may have in this field, because obviously Mike and I are not going to be able to field some of these topics.
No,
What do you mean? What do
please,
you mean?
I'm available to assist anybody who'd like to know. If I don't know something, I'll tell you, but I'll tell you where who does. So, in my career, I have made good friends across the industry. And so we stay connected with them.
And we should note that historically, Ryerson, this isn't markets that Ryerson has been in, but now we are more and you mentioned Production Metals. That's a company that you had come from, one of our family of companies.
Yes.
And I guess those that are in these markets that, what can they expect from Ryerson in serving this market, right? You got the metal supply now, you got the inventory, the supply, the network. Talk a little bit about what those kind of two powers coming together can help for these verticals.
So I am happy to be here because Ryerson has 110 locations in the U.S., Canada, and Mexico. We are the second largest distribution company in North America. So our buying power is considerable. We are one of the largest in the country, if not the world, in flat rolled sheet and plate for stainless and aluminum, and now rod and bar. So what customers can really expect from us is to be able to, we are now able to stock and sell these aerospace, semiconductor, and defense products throughout the country and offer a timely service and delivery. In addition, we have a website where you can go and buy metals online. So we have made it convenient for our customers to reach us. We have the ability to deliver in just a day or two across the country, and we have the expertise to assist customers and when they need unique or specialized metal solutions to solve the problems that they're finding. They're having either in design development or finding the metals that they need. So I would encourage them to reach out to us. We've got something that's new and exciting. We have very, very solid and strong competitors. But I think because we are a single entity with all the resources we have, we'd be able to serve them better.
And that website you mentioned is Ryerson.com, by the way.
That's right.
Nick, thank you, Russell. And if you
Thank you.
can stick around for a few questions here. So, like I mentioned before, I got some other points from some of our other vertical market managers. And Nick, would you mind maybe bringing up the industry information, the U.S. Census Bureau slide you had on the different markets as a request there from somebody. But and then we do have a few other questions related to tariffs that I do want to get to. But while Nick pulls up that slide, and Russell, very, very interesting stuff, and I think it's a fascinating market for sure. Like I mentioned, we have vertical market managers in data centers for sure. And Chelsea Hunt is our vertical market manager there. She's saying that there's massive investments happening in data centers, which is also helping commercial HVAC for sure. And outside of data centers, some school and government related work has been a little slower to release, and we're seeing buyers hold off on making commitments. All related to tariffs, to tariffs. So that's going to be the theme across a lot of these comments that came from our managers. Stuart Smith is our medical device vertical market manager, and he says that he's seen some customers move up purchases to beat the tariffs as a short-term fix, but have only recently started to make real changes to their supply chains by reshoring or nearshoring. So you see that trend starting to develop. And OEMs in that space, he says, are finding it difficult to pass on these additional costs due to contract pricing on their end users. So I mean, there's a real struggle there. Trailer, we had someone ask. Matt Northeast is our vertical market manager there. He's saying that the vertical market's remaining strong despite tariffs. Common theme here. And he's saying that customers are currently reporting backlogs of approximately 2 to 3 months. Again, many of them are reevaluating their supply chains to assess kind of the origins of the materials. So I think that's really important too. Something else to note, right? Get the mill test reports, right? So you know where that material is originating from. And I think that's a really big thing that a lot of folks are looking at. Cautiously optimistic, he adds in the trailer. And then finally, industrial automation, Mark Brewer is our manager there. He's saying that's really slow, mostly slow, I should say. Industrial automation customers are seeing the effects of tariffs on pumps, motors, electrical components, more so than they are metals for the most part. However, he says some of our customers have been bringing in machine frames or fabricated units from China, and they're looking for sources to help offset those tariff concerns. So I think some commonalities here across our verticals, right, is obviously wait and see with the tariffs. But the good sense is everybody said there is some cautious optimism here, right? And those that kind of have been supply chains outside the U.S. look like more nearshoring and onshoring. So some cautious optimism there, but a kind of a mixed bag what's going on. I don't know, Nick, anything to add on that?
Yeah, I think as you're walking through verbally all of those things, I was kind of visualizing on this chart just kind of where each one of those categories would ultimately land. And it sounded like it almost fit within, what this chart is ultimately showing, where there's some areas that are they're feeling a little bit of pain, a little bit of struggles. I'm sure there's uncertainty and volatility around supply chains as there's just near-term volatility there. But there are some pockets of strength too, but there's no doubt about it. I think Chelsea mentioned the fact that she's seen data center growth. We're continuing to see that. There's some small pockets of what I would say hesitancy or delays in some of those projects, which is a little bit of a headwind, but I mean, still big numbers, tens of billions of dollars being spent on CapEx within the data center space. So no doubt that remains a hot spot.
Yeah, and I'd be remiss if I didn't mention Amanda Seabaugh, who's our vertical market manager for what we call emerging markets, electric vehicles, charging stations, a lot of those things on kind of the emerging vertical fall into that as well. All right, got a few questions here to round out, if you don't mind.
Yeah, of course.
So pull up your eye chart there. Everyone loves the eye chart.
Let's go for it.
Actually, nope. I'm sorry. Before you, I always get hit at the end saying, "Why didn't you put up the eye chart?" Put it up because people want to see it. Go ahead, put it up.
Let's do it. Let's do it. Yeah, and I think it tells a similar story to what you were talking about, which is we have seen in the last couple of months a little bit of some manufacturing economies have taken a temporary skid. I think as things are getting reworked, as people have kind of gone to the sidelines, those who did some pre-buying maybe took a temporary pause for the last couple of months. We are seeing that reflected slightly within the PMIs. You look at the global number, the last 3 months have been slight declines from February, where it looked like it was tracking fairly well at 50.6. But it's hit or miss depending on the region. Both Canada and Mexico are getting hit much more severely than, say, the United States. We're continuing to see India move at very strong rates up in the high 50s range. Europe is getting a little incrementally better, although they're still in sub 50 territory. So it remains a very mixed bag. There are a lot of people who are sort of sitting on their hands wondering what the end policy is going to be like. And unfortunately, we just aren't there yet. It seems to be taking a little bit longer than what I had expected. And I think what many in the market had hoped, because I would have expected, and it sounds like you were on the same page, I would have thought we would have had 5 to 10 trade deals announced by now. And we only have one really officially. But again, I remain somewhat optimistic, cautiously optimistic that those things are going to come, and we're going to get a better idea of what that blueprint's going to look like here in the coming weeks.
Makes sense. Yep. So to round this out, we've got a few questions related to reciprocal tariffs and kind of tariff math, like I like to call it, right? So Lori's asking, so if we have an additional 25% plus a 20% reciprocal onto that 25%, does that make it 70? How does the reciprocal 20% work?
Well, I guess it depends on the supply chain, because we've run through a number of different scenarios where we have a 25%. We being the United States have a 25% tariff, and then Canada had a reciprocal 25%. In some cases, those can stack. In some cases, if there is value added service and being done to the product, there are chances it can actually get excluded from those things because it's coming back into the United States as an end thing. That's happened a lot with automotive products going into Canada, getting fabricated, coming back in the United States. So it's really going to depend on the specific supply chain on whether or not they stack or not. I think the big caveat within this most recent announcement was just the fact that the Canada-Mexico relationship is really not exempt or excluded from this 232 announcement, where Canada and Mexico under the current terms are getting 50% tariffs on carbon steel, stainless steel, and aluminum by way of 232 national security.
Does Mexico have reciprocal tariffs?
I honestly can't recall off the top of my head. Yeah.
Yep. And how do you expect the Canadian carbon market to react to the floor set by imports to the U.S. market?
The Canadian carbon market is in a tricky spot right now, and it's an interesting one because Cliffs just less than a year ago purchased Stelco, I believe it was, and that entity is now not doing so great because the local Canadian market's really not all that strong. The Canadian product currently under the current terms is getting hit with a 50% tariff, so it's not really all that cost competitive. It's not cost competitive at all. So I think that market's under some pressure right now. I would expect their new prime minister to come to the negotiating table in hopefully fairly near fashion to try and get those brought back down.
We actually got a link from somebody too that says that they're actually talking right now. So who knows? Maybe some behind the scenes. We got an insider.
Love it.
Russell, we got one for you here. Someone wants to know about titanium. You mentioned titanium. Do we produce that in the United States? And I guess mills that produce that, is that something that is more foreign or domestic?
So there are a few titanium mills here, 2, 3. There is, however, announced 2 new greenfield titanium mills being built. One in North Carolina, and I think the other's in Ohio. So the 2 new titanium mills being built here. So that's a good thing. However, the base is that you make titanium from is titanium sponge. Titanium sponge, the 2 biggest and largest in the world are VSMPO in Russia in China.
Okay.
So we have issues.
Titanium sponge. All right.
Mhm.
Okay. Okay. Nick, I don't know if you know this one. Have a domestic aluminum mills raised their prices that we know of? This could be a question for
Yeah.
okay. We're both nodding our
Yeah,
heads.
for sure. I mean,
Yeah.
certainly on the Midwest premiums, we're seeing very rapid moves in the premiums. We noted that just within the market rate. Both Platts, the spot index, as well as the futures markets have gone up by about 16 cents. The conversion numbers are also, depending on the supplier, going up anywhere from 15 to 20 cents, I would say. So the summation of those two would be how large the increases are. But the markets are certainly tightening right in front of our eyes.
Yeah. Okay. One last note before I get to the closing thoughts here. Russell is going. You can meet Russell in Paris if you're going to be in Paris.
Yes.
June 16th through the 19th. Ryerson's going to be at the Paris Air Show.
Yes.
Russell, anything you want to note about that show in particular?
Well, specifically, I want to invite everybody to come see us. We have a booth at the Connecticut Pavilion, Hall 3, booth number C164. Hall 3, booth 164. And also, we are hosting a beverage and food on Tuesday, the 17th, 1500 to 1700 hours. And we cordially invite our audience in attendance to please come join us. We'd be happy to share with you the fact that Ryerson has entered into the aerospace and defense and semiconductor markets in a big way. And we'd love to show you how we can support you and your future metals demands there.
And
Sounds beautiful.
Russell's going to fly one lucky Cup of Joe audience participant out to Paris, right? Check for the number under your seat. All right. All kidding aside, Russell, awesome. Great talking with you. It's such a fascinating market.
Thank you for having me.
Yeah.
Such massive potential too.
Yeah, absolutely.
Yeah.
Yes.
Any closing thoughts here, Nick?
Yeah, I mean, I put in all this effort to go through one of my artificial intelligence engines to make this slide. So I feel like I have to go ahead and share this. Give me one sec. All right. So I did all this work because many in the market are calling for the taco trade, which, for those who don't know, the taco trade stands for Trump always chickens out. And it's the idea that these tariffs are currently sitting at 50%. It's unlikely that they're going to, because people will push back hard enough, or there'll be such a drastic market reaction that he will eventually bring those back down or cave on trade deals. I came up with my own, and this is kind of lame, but this idea of Zest. I don't know if anybody else used Zest soap back in the day, but I've got Trump's head in a bar of soap here. The zippy, energetic showman triumphs. There's a potential that he holds strong, keeps the 50% tariffs in place, and any other countries end up caving and coming to the trade discussions. I will say, and this is completely anecdotal, though it's kind of fresh, we are currently sitting in a situation where things in DC are kind of turbulent. For those who are watching live, I mean, Trump and Elon Musk are currently in a battle. I'm sure many of the discussions between the current administration and foreign nations are getting somewhat heated and potentially hostile. I would expect we're probably going to see some volatility in the coming days and weeks with regards to trade talks, just general business conditions. But I continue to remain, and maybe I need to throw my Dr. Doom label completely under the table. But I do think at the end of this, there's going to be some combination of this taco trade and the Zest Trump that's going to be, yes, we're going to get volatility, but there is some purpose to it. And hopefully we land in something that's a little bit of a middle ground, and both sides of the equation can win. But I do truly expect that here in the coming days and weeks, we're probably going to see some choppiness within tariff talks and just business conditions.
Well said. Well, until next month, which I'm sure we'll be talking about probably tariffs again. So
probably. Looking forward to it.
Thanks, everyone.